Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Monday, August 4th. The euro managed to gain against the dollar on Monday even after more bad news regarding the European economy was published. The Sentex Group's monthly index of sentiment in the 15-nation euro area fell to negative 15.3 from negative 9.3 in July. This is the lowest level seen since July 2003. There was worse news on inflation. Eurozone producer prices rose 0.9% in June compared to May, and were up 8% for the year. Much of that gain was attributed to energy, which rose 21.4% in the year, leaving producer prices ex-energy with a yearly gain of 4%. The daily chart shows a pair weakening over the past 3 weeks, falling below the 20, 50, and 100-day simple moving averages and losing almost 400 pips in the process. The pound continued its decline from the break of channel support on July 29th after another report indicated the UK economy may be tipping into recession. The Chartered Institute of Purchasing and Supplies Construction PMI fell to 36.7 last month. This is the weakest reading since the survey began in 1997. And readings below 50 signal contraction in the sector. The housing sub-index fell to 18.7, the 8th consecutive monthly fall. The Institute reported last Friday that its index of manufacturing dropped to 44.3. This is the lowest since 1998. The 4-hour chart shows the cable has recently broken below the support line on the descending triangle, which is usually the outcome, and may continue to fall further in the run-up to the BOE rate decision Thursday morning. The Aussie gained against the dollar for just the second time in the last 10 trading sessions, holding a crucial support level at the 92.85 area as it rose off a 3-month low. The technical bounce from an oversold condition might be short-lived. Policymakers are meeting to review interest rates tomorrow, and this may signal that they are moving toward cutting borrowing costs to spur growth. Another government report scheduled for release on August 7th may show job growth slowed to 5,000 in July from 29,800 in June. My, how the mighty have fallen. The Aussie, which was flying high less than 3 weeks ago, has dropped more than 500 pips and plummeted through the 20, 50, and 100-day simple moving averages, and depending on the RBA decision and statement early in the morning, may very well take out the 200-day SMA, which is less than 100 pips below the current price. The loonie continued to rise Monday after Thursday's GDP report showed that the Canadian economy contracted for the 3rd month out of the last 4 in May. The pair is looking to close above the highs of April 1st and June 10th, which likely opens the way towards the high on January 22nd as oil continues to fall and traders continue to price in a rate cut from the Bank of Canada. The bank cut its 2008 growth forecast on July 15th to 1% from 1.4%. The daily chart shows an ascending triangle with the pair pushing the resistance level and trying to break and hold off a 1.0360. The Swissy fell with the equity markets, but did find support on the extension of the trendline resistance, which has now turned to support, drawn from May 8th to June 13th. The Credit Suisse SVME PMI fell to 54.1, the lowest level since August 2005. The PMI also highlighted cost pressures, which may limit the Swiss National Bank's ability to support the cooling economy by cutting rates, with the price index hitting the highest since January 1995 at 78. The daily chart shows a symmetrical triangle, which is usually broken before the apex of the triangle is reached, and we are close to that point now. The Japanese yen rose even as the S&P traded lower for most of the day, but with the Japanese economy seemingly tipped to contract in the second quarter, the suspicion is that the Japanese central bank will come under corporate pressure to allow the yen to depreciate after a report on May's exports showed an overall decline for the first time since 2005. There are no economic reports scheduled for release from Japan until the leading economic index on August 6th. Traders are still eyeing the crucial 108.50 resistance area. The daily chart on the yen shows an ascending triangle as the pair continues to move higher and challenges the support level. A break of 108.60 will be needed to break the triangle. The upcoming economic calendar is jam-packed with top-tier releases. At 12:30 we have the RBA rate statement out of Australia, and at 04:30 we have manufacturing production and services PMI from Great Britain, 10 a.m. is the ISM non-manufacturing composite from the U.S., and at 2:15 we have the FOMC also from the U.S., and at 21:30 we have home loans out of Australia. In Asian equities, the Nikkei tumbled 172 points, or 1.32% to 12,921, while the Australian S&P ASX dropped 16 points, or 0.33% to 4887. In European stocks, the German DAX declined 46 points, or 0.73% to 6349, while the UK's FTSE fell 34 points, or 0.64% to 5320, and the Dow Jones Stock 600 lost 2 points, or 0.95%. On Wall Street, at the close of floor trading at the New York Stock Exchange, the Dow was at 11,284 after falling 42 points, or 0.37%. The S&P closed at 1249, down 11 points, or 0.9%, while the Nasdaq finished trading at 2286 with a loss of 25 points, or 1.1%. Crude oil for September delivery fell $3.67, or 2.9% to $121.43 a barrel, and briefly fell below $120 a barrel for the first time since May, as speculation that Tropical Storm Edouard will miss most of the offshore oil facilities. Gold futures for December delivery fell $9.60, or 1%, to $907 an ounce, even after yearly PCE printed at the highest level since 1981, as a fall in oil reduced gold's appeal as an inflation hedge. Treasuries were slightly higher. The 2-year note fell 2.7 basis points to 2.515%. The benchmark 10-year note fell 2 basis points to 3.956%. Overall, the story during the New York session was the dollar's connection to oil prices. Oil trading was volatile as traders were torn between concerns about demand and fears that Tropical Storm Edouard could threaten oil installations in the Gulf of Mexico. Oil fell below $120 after fears regarding the storm abated and after a Reuters survey showed OPEC's supply rose for the third consecutive month in July, mainly because of increased output from the world's top exporter, Saudi Arabia. Also, hopes were raised that talks with Iran regarding their nuclear ambitions could avert a confrontation. Traders sold other commodities as fears grew over demand destruction. In the meantime, all eyes will now be on Tuesday's FOMC decision and statement. This concludes the London Forex Broadsheet's daily wrap of the markets. We thank you for making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.